Would you rather put money to work at home or abroad? And I'll go to our emerging market specialist, Timothy Seymour.
Well, there's no question for me. I'd rather be abroad, not only because I'm the ambassador, but I also run an international ETF, IDEVO, which was the I in BLICEP last year. I just think that there's a lot of different reasons why this trade isn't just a 2-week trade. And I think that's the debate for people. It's actually not a 2-week trade. It's probably, if you look at the outperformance, DAX outperformed the S&P by 25% since Thanksgiving. But I'm going to coin, Dan likes what is it?
The Fateful Eight.
Fateful Eight. So I'm going with MEGA, which is Make International Great Again. Oh. And it's with some irony that the rest of the world has really been rallying since this administration took office. And I think it's a combination of the dollar is going to get weaker. I think there might even be like a mini Plaza Accord. Take your history book out for people if you don't know what that reference is. But the fiscal dynamic out of Europe is important. I think DeepSeek was a very important event for the world. I think it's certainly beneficial to China, but I think it's beneficial to Europe. I think if you get a Ukraine deal, leave the politics aside of that. I think energy costs in Europe go way down. I think the dynamics for deregulation in Europe are very important. But you started all this with a 15-year relative underperformance. That is something that doesn't change overnight. And you can make an argument that you're starting to see this trade work bits and parts of the last couple of years. So the valuations offer you a really attractive upside. Even here, as a discount to the U.S., you have better dividend yields, and I think you have fiscal policy as a tailwind.
Is this trade, though, really working because U.S. tech has been under pressure? And in Europe, for instance, right, it's underweighted tech relative to the United States. It's really been benefiting from the presence of industrials and banks, the things that had been going in the rally, even here in the United States.
So are you saying that the tech money leaving just one of the places it's going?
If the tech trade is back on, maybe
right.
the money doesn't,
will come back. I mean, I've had on various international for a while, and the only one of really any significant size is China. The rest is just little EWG and DXJ, which is actually yen adjusted. But so I'm feeling a little underweighted rest of the world. But I feel like,
most
my
people
God.
Are.
Yes, exactly. Right. That's how we got here,
it's
sort of, with that, all the money flowing into a market that doesn't have the market cap to absorb it. It's just going to go up. So, but I feel like, God, this has been such a big move. Maybe we do see a little pullback, and I'll have to jump in anyway.
God, you're
what
smart.
Are you laughing about?
No, because
he's going Plaza Accord. That's where
Plaza Accord.
Come on.
No, but I hearken back to Las Vegas like 8 or 9, 10 years ago, and
when we went to Las Vegas.
Out, and we were just sort of hanging out collectively, and somebody approached us and said, "Is there an emerging market specialist amongst us?" Staring straight at Tim Seymour. It's one of the highlights of the.
I didn't pay anybody for that. That was legit. I mean, there are people that want to know.
Of course they do, especially
now.
Never know.
Especially now.
With that, all that said, yeah, I agree with Tim. I mean, I think you definitely want to stay there. We talked about EWZ at the end of January, and look at how well that's performed. That's the Brazil ETF, by the way, and a weaker dollar is going to win there. And quite frankly, that's about to break through about a 15-year downtrend that we've been in. And FXI, say what you want, but now you're talking 3-year highs, and I think that's got a lot of room left as well.
I'm going to trade the globe here a little bit. There we go. We're just getting it in here. I think a good pairs trade at this moment on a short-term basis would be shorting international along the U.S. I mean, my base case is kind of that all of this chaos that we've absorbed over the last couple of months and is doing a number on the markets because the markets are anticipating the potential for a slowdown here if we were in a full-scale trade war. I suspect that doesn't happen. I suspect as we get into mid-April, we get back to that kind of base case scenario. Now, it certainly happens if the market continues to go down because it worries a bit more of a slowing economy based on the policy. So to me, I think the U.S. is probably more interesting at this point, and I think we'll probably test those recent lows, the 5,500 level from Friday at some point, and you may have a really good opportunity to kind of average into this trade as it relates to the U.S. The one thing I'll say is in China, there are some opportunities. If you look at like a Baidu, okay, they get the predominant amount of their sales from search-related advertising, okay? But we know what this model looks like. It looks a lot like Google. They have a video site. They have a cloud business that's growing fast.
They have Ernie.
Yeah, they do.
The AI.
Oh, yeah.
Ernie.
Oh, yeah. And so I think a name like this, maybe they can pull up a 5-year of this. It looks a lot like Alibaba before it just took off. So to me, I think like you're going to find interesting opportunities, especially with all that stimulus. But I wouldn't hold your breath for this stimulus to kind of give the Chinese economy a huge bump because it hasn't over the last few years.